exports data exceeded forecasts today. What do you make of China's economic recovery vis-à-vis the global recovery?
Obviously, China now is the yardstick of the global economy. Everybody is watching, particularly this economy, very close, as we do as well, of course. So it's good to hear that economic stimulus kind of finding its way and also lifting markets up. As you mentioned, or of course, the data is a little bit biased due to the Lunar New Year. But generally, I think it's good to read that some of the measurements that took place recently are also bearing some fruits.
With China's economy recovering, do you see demand of commodities pick up?
Certainly, the global commodity markets would benefit from a recovery in the global economies and in the equity markets. It's the late movement of money going into these markets. Most of the commodity markets, especially steel, iron ore, that particularly important in China, have been suffering over the last few years, also since the recession started to take place. And certainly it would help a lot. On the other side, I believe with all the quantitative easing and with all the reflationary methods and instruments that took place over the last few years, one way or the other, the money will pour into commodity markets sooner or later. So I'm very confident about that.
The Fed's quantitative easing program may be tightening China's easing measures as well, possibly in the second half of the year. Would that pose any risks on commodities?
The risks, I would say, are similar to all other asset classes, just that the commodities in general have a bigger upside if the global economy starts to recover due to the demand. We at SUPERFUND, we are also heavily invested into the gold and silver markets, where we also see an alternative theme, an alternative flavor due to that, where we believe when there are austerity programs, reflationary methods that have been created over the recent years, if the economy recovers and even if the Fed tightens their tools, it will still benefit sooner or later, because there has definitely been an imbalance between money being created and the prices of commodity markets, which are still core asset and at least tangible assets that we have there.
What are you advising clients on their commodities portfolios? Which commodities should they have in their baskets?
Certainly, it has been a tough environment for the commodity market. So our clients are in a fairly diversified basket, where we provide them up to 130 to 150 financial and commodity instruments, where we can also go long and short, which makes hopefully different for them. And we're using a systematic trading mechanism for them, and have been fairly satisfied with the results. Generally speaking, we advise on diversified portfolios. We understand that fixed income, equity markets, real estate portfolios are eminent in the portfolio anyway. So having some core portion in commodities is strongly advisable, as nobody can predict when some equity market corrections could take place. Doesn't look for 2013, looks like a solid year for the equity markets, but we can't predict the timing. So having a diversified portfolio is the key in our opinion.